we're back with our market breakdown. About 30 minutes for the market to open. So let's see how that opens. At this moment, futures do look better. They do look like they're going to be heading higher at this moment. So let's break it down. Let's see what else is going on in the world. Market's been a bit dead for the past week. There's not that much news. We just got news about on Friday that Block is going to be joining the S&P 500. So there's been a takeout. Synopsis is buying Ansys. So because of that, you're now getting a open space on the S&P 500. Trade Desk joined in to the S&P 500, and now you're looking at Block joining in, and I think HES is coming out as well. So that's what's been currently happening. Anyway, we go over a few of the news. There's been a new video that you should also be able to see that's been put out this morning. Let me actually see if I can get a link to that, and then I can share that with you guys. Let's see. How's everyone been doing? I haven't been live for quite a while now, but I think just maybe last week, a few days. That's about it. But the market's been pretty dead, so you haven't really seen too much. Let me see if I can get a hold of the link for the video, so I'll put that in and then you guys can tune in. Okay, everyone just drop in and say hi, whoever is here. So I know who's here. Go ahead and vote. We got a question today that says, which company's earnings are you watching most this month? Is it Tesla, Meta, Microsoft, or Google? I would be watching Meta. The advertisement market for Meta is more important. It's more important at this moment to know how many people are spending, how many companies are spending on digital advertising. And as a concept, the more amount of money that is spent on digital advertising means the consumer spending and consumer demand is strong, right? So that is currently what is going on. Let me find that video so I can then pin it, and then you guys can go ahead and there you go. So you should see it right there pinned right about now. Yeah, okay. So that's the new video. It's just a breakdown on what an ETF is and what exactly is going on at this moment when it comes to an ETF. What are exchange traded funds? How can you profit from it? How have people profited from it? Should you look into a growth based ETF? Should you look into a dividend based ETF? Which one works for you? Go ahead and select whatever works. Everything's great till the time you're able to tune in and figure out that okay, this is what works for me, this is what doesn't work for me. At the end of the day, we're here to make money, so that's the whole basic concept, right? So everyone that's new here, go ahead, subscribe and hit the poll. You should see a poll on your screen as well, right? Which company's earnings are you watching most this month? Tesla, Meta, Microsoft, Google? My bet is on Meta. I actually want to see the ad spending. I want to see the consumer demand that's be happening on the ad spending networks. That'll have a bearing on how Trade Desk has done. That'll also have a bearing on how Netflix's stock ends up doing. Remember, Netflix as a stock did not do that well post earnings. They had an operating margin issue. So, if you logically think about it, the issue that was going on there was Netflix makes a lot of money also outside of America. So, a lot of the money comes for them from different sources. Now, different countries, they don't charge you in US dollar rates, right? They're going to charge you for rates of that particular country. Like now I'm in UAE, so I'll be charged in dirhams. When I'm in Indonesia, I'll be charged separately. When I'm in India, it'll be charged separately. All that money then goes back to America and gets converted into US dollars. Now, this is the same model that works for Spotify, that works for Meta, and all these other companies. They take the prevailing currency that they're operating in, they take that as revenue, and then they transfer all of that money back to America. And when they get it in America, they flip it into a dollar, right? So a lower dollar, which means what's happened since January of 2025 till now, the dollar has weakened almost double digits, right? Almost about, I would say 8 to 12% in that range. I don't know exactly what it's at right now, but it's fallen from 106 at the highest to about 96, 98 now. So that means for all the currencies that I do have, which are non-US dollar, I'm now able to make more money on it. I'm able to pull in more amount of money. and push it into now more amount of dollars, which means I start making more amount of money and my earnings start going up. Not just my revenue, not just my earnings, but even my FX denominated revenue now goes up. Keep in mind, I've been saying this before, you've been following me on the live before as well. And I keep saying this that a lot of these companies in the previous 6 to 8 months, before the dollar started falling, were saying that a dollar strengthening is going to affect our earnings. Now it's the flip side. Dollar weakening is now helping these companies. Remember, America is an export driven economy. They're not an export of items itself, they're an export of services. So your Spotify, Apple TV, Disney, Netflix, all these other things, right? They basically take care of a lot of non-US denominated currency income in their books. So when the US dollar falls, for these companies, they start earning more. So if you look at it, Netflix went in and raised its revenue and moved it up another billion US dollars. Now that billion was FX denominated. But the thing that happened is because Netflix has a lot of shows coming up in the third quarter and the fourth quarter. So you're going to see more amount of, I think Squid Games 3 is the only one that came out right now. But then you're seeing Wednesday, there's a new show that came called Untamed with Eric Bana. That's coming up also. It's pretty good. Now that put together, all of this is going to have a lot of spending. So Netflix is going to be spending money in order to try getting more and more people to come into this, let's say their ad revenue model or their premium model without ads. Irrespective of whatever be the same, their main aim in this is to try seeing that they get more money, right? So they need to do a little bit more ad spend, they need to do a little bit more sales and marketing. So that's going to bring their margins lower. That the street didn't like. So because of which you saw the stock go down about 4.5-5%. Let me see what the stock is actually at right now. But on Friday, as of close, post earnings, it wasn't actually doing pretty well. But anyways, by the time the chart loads, that's the whole crux that's currently being playing out, right? The stock was down about 5%. As of today, it's flat. Anyways, story necessarily being that if you look at Netflix, there is ad demand out there, but it's really small. Netflix not going to be able to, let's say, pioneer in terms of ads the way Meta and Microsoft have. Hence, the larger scenario here is for Meta as well as, let's say, hold up, give me a second, one second. Okay, so the thing that happens with all of these companies is that they need to make sure that a lot of their money is coming through from non-US denominated countries, take that money in, pour it into their economies, and then their earnings start picking up. Now, whether that's in earnings of revenue, whether that's in per share basis, that's how it works. Anyways, point necessarily being that that's what you're seeing with Netflix. Are we going to be seeing the same reaction with a Meta? Are we seeing the same reaction with a Trade Desk? Are we seeing the same reaction with the Snapchat, Pinterest, Reddit? That's what we're going to be seeing this week and the next week after. How that plays out is going to actually be worth looking into. Remember, uh, it's exceedingly important to keep in mind that what you need at this moment is more and more amount of consumer spending. If the consumer is strong, and that we've seen with retail sales. So retail sales data was strong. We've seen that work well for the economy. You're seeing the stock markets higher. We've pretty much forgotten everything that's there about tariffs. No one really cares about it. In 2025, the theme is everything is temporary. Nothing is permanent. No tariff rate is permanent. No tariff on any country is permanent. No appointee is permanent, including Elon Musk, right? You will have someone come through and then they're all gone. Now, be that as it may, it is what it is, whether that's Elon, Trump, or anything like that. The market cares about certainty. The market was pretty much collapsing in April and before because there was uncertainty. Now there is no uncertainty because the only certainty is that everybody pretty much knows that the tariff rates are only coming lower, they're not going higher. So the market has already reacted to that and moved up higher. Now you are seeing that in terms of the S&P hitting an all-time high today. I think we're opening at an all-time high. The Nasdaq, when I last saw, was up about 6 points. So it's not really up too much. We were up about 65, 70 points about an hour and a half back. So we'll go see if there's any news that's come out because of which the market is lower. But at the moment, we're still up only about 7 to 8 points for the index. Maybe maybe the S&P also opens closer to its all-time high. So 62.96 is where we closed at. 63.15 was an all-time high that we hit about 3 days ago. Remember, in bull markets, we are usually making new highs, and it's usually that nobody is buying in because they're all thinking that we're going to get a pullback. Markets are going to come lower. Looks like we will not get an opportunity to buy in. It's the same story. Whether you buy at an all-time high or whether you buy at a pullback, your returns are usually the same. Okay, let me break it down very easily for all of you. There is no correlation to saying that, okay, if I am buying at the highs, I'm going to now lose money, or I'm at a more amount of risk rather than buying at a 5% drawdown. There is enough research that's happened back in history saying that it is close to impossible to try saying that there is no way in hell that, okay, if the prices are lower today and the prices are higher tomorrow, just because I bought it today, I'm going to be making more money 5 years out, 10 years out. No. If you buy at all time highs, there is no correlation to tell you that you are going to now lose money because you're buying at an expensive valuation. In stock markets, unlike most other assets, strength begets strength, which means the more amount of strength that's there in a bull market, the higher the prices go. The more amount of FOMO that comes in, the more amount of people that miss out, the more and more people start joining in, and this bull market becomes larger and larger. That's the game in town. It's not rocket science here. It's pretty simple to understand this. The game is that you need to stay invested, right? Who is it? I think it was Bill Miller that said this. It's not about timing the market, it's about the time that you spend in the market, right? So keep that in mind. That's what we're trying to explain here since almost 150 200 videos of lives that we've been doing, pretty much almost every market opening that's been happening. Just make sure you buy great companies and stick to it. Anyways, in more important news, what we were talking about was the scenario that Meta, with its earnings this week, is going to be telling us as to how the economy is, how the advertising economy is. Because remember, the first and easiest way for companies to pull off money from the table if they start seeing a weakening consumer is to start pulling money out of advertising. Like, let's say if you ever you want to promote an Instagram post or you want to promote an YouTube video, it's just a click of a button. It's not rocket science. It takes like 10 minutes to set everything up and it's already out on its way. If in case you are spending, let's say, $10 per day on promoting your Instagram post, Instagram story, whatever you do, I don't know how it happens, or whatever happens with the YouTube video that you want to promote. What I do know is that with a click of a button, you can just say stop advertising or stop promoting, whatever it is, and you don't get charged from the next day. What does that mean? The easiest way to pull out money when you're weakening or when your pocket has less money is to stop spending money on advertising. Now, when you stop spending money on advertising, you start getting a lot more money into your bottom line. But the thing is, the only reason why a company stops spending on advertising is because it's not because the fact that they're losing out to their competition, because everyone wants to spend money so that their competition doesn't spend more and gains market share. But you start realizing that there is only so much money that I start making. If I start spending on advertising more and more, if the consumer is not rich enough to buy or the consumer is not strong enough to buy more and more from me, what do I do then? How do I continue making money? Because now I'm spending more money and making less in profit because my consumer is not strong enough to continue buying my product. So that is something why Meta's earnings for me are by far the most important. they to a large extent will be the barometer to how the economy looks for me. I'm not saying for everybody, but a few reports that we've had when it comes to Fastenal, when it comes to the banks, the earnings have been phenomenal. Now remember, Wall Street analysts usually at the start of a quarter, start of the previous quarter, ends up having a very high earnings estimate, and they keep bringing their estimates lower towards the earning season. As soon as the earning season begins, they start then increasing their estimates. So usually companies, more than 50-60% of the companies always beat, right? So it's not that the economy does way better, that's why everybody's beating. It's because of this concept that it is simpler to beat when the analyst estimates are lower, right? This beat and raise concept that you think, where a company says, okay, I'm going to make $10 billion in sales, they end up making 11 billion. Who makes that 10 billion? Where does that number come from? It's the analysts that sit down at the Wall Street banks and start saying, okay, what we believe is that over the next quarter, these guys are going to be making 10 billion because in the previous quarter they said they would be making 10 the next one, or they do some math and everything else that they decide is important. They take all these big formulas which don't seem to work, and they come in and they say, okay, here's 10 billion for the next quarter. The company comes in and either makes 12, or it makes 8, or it makes 11, or it makes 9, but it never makes 10, right? Because that's how good the analysts are. Now, all these companies then either have a beat or they miss. Now, if you get miss, you basically get thrashed. If you have a beat and a raise, you usually do better and the stock goes higher. Now, remember, in bull markets, it is more than discounted because stocks are almost at all time highs and usually at all time highs in bull markets. That most of these companies that do come out with their earnings are going to beat and raise, or at least beat. What happens is, if I say that, okay, I'm going to be making $300 million in earnings, and my stock's at an all-time high, and when I report, I say I made 301 or 302, the market still forces my stock to go lower and it tanks. The reason it tanks is because the estimates have not been beaten by a large enough quantum. That is important. So when you get earnings of 300 million and they come in with the estimate being at 270 and they came in at 300, now that's a very big beat. So the stock would be up more than 10-15%, right? That's why you see all these erratic moves happening in stocks in usually in America when they have these earnings results, right? So look at a Netflix, same story that I was explaining to you. It's the same thing that happens here when you start seeing these stocks coming lower. You're looking at it as to why is Netflix down 5%? It's not that they had bad results. It's just that they're not looking like they're going to continue making more and more money the way it's been going on. And they're saying that, okay, here's a scenario where my operating margin is now going to be a bit lower, which means I'm going to be making a little bit less money compared to before. And the only reason that's happening is purely because of this concept that one, I'm getting FX headwinds, FX tailwind, which means I'm making more money, but I'm going to spend a lot of that extra money that I'm getting, right? So that is how this game is played. So make sure you understand the game. If you can understand how this game is played, you will make money. Stop worrying about, oh, what is the tariff rate and is Elon happy with Trump or are they not friends and are they fighting like mom and dad and all that stupid shit doesn't really make a difference, right? Anyways, what do we have? We have okay in the house. Okay, hi, how's it going? Sean's in the house. Hello. Yo, what is about Nvidia? What about it, bro? But I would guess if you're asking me saying what happens about Nvidia, uh, till the time there is no one that can make a chip better than what Nvidia makes, and till the time you have these news articles that keep going about Meta going in and poaching Apple's AI guy, Scale AI, and getting people from X, Y, and Z and bringing people in together. And that's the reason why stocks go up, stocks go down. Nvidia will keep doing well. Remember, Nvidia is the picks and shovels of the world. The way you make money in stock markets and in business, especially, is you're not the one that goes looking for gold. You're the guy that gives the gold miners the picks and shovels. So you sell them picks and shovels, and the more people that look at gold, they go and keep digging in search of that gold. Now, because they're not able to get that much amount of gold, they keep coming and buying their picks and shovels from you. Nvidia is the picks and shovels of the artificial intelligence world. Now, if you just want a simple answer as to where is it going to go, my bet is $200. Now, But do I think 200 is where it will go and turn and all of that? I don't know anything when it comes to short term. So it's as much as a bet. If you say 150, I'll say 200. If you say 200, I'll say 150. So I don't know anything about whether it's going to go higher or lower and all of that. My bet is that because I follow this concept saying stocks that break out continue breaking out and keep doing well. When it did break out of the 150 $160 range, it looked like it's going to be heading towards 200, and that's what's happening. It moved from 155 160 all the way to 173 174. From there, let's see what Nvidia's at. 170 250, right? So Nvidia for me does look like it's going to be a $200 stock. It can go to 5 trillion. It can go to 10 trillion. Remember, markets can stay overbought and oversold longer than you can stay solvent. So don't try testing this fact as to how big is big, because it can keep getting bigger. All right. Now, Apple today is a $3 trillion company and Nvidia is a $4.2 trillion company. Right. It's about 40% differential. Now, if I was a buyer and seller of any company with a gun to my head, I would choose Apple at this moment, because I believe Apple has about 150 200 billion in cash lying around doing absolutely zilch, right? They could very easily come out and do a deal with any of these AI companies or whatever they want to. And trust me, you get a swift any news that Apple's doing any AI dealings with anyone, the stock is going to rocket. Because remember, the company that is flawless at execution is Apple. No one even comes close to them. Now, am I here trying to make money on which stock is going to be the next $5 trillion stock? I would bet Apple would more than likely not get to 5 trillion faster than what uh, Nvidia would get to. But can Apple have a better return in the next 9 months compared to Nvidia? I might believe so. I am of the belief that Apple will fix their AI stuff. And in the next year, you might see it breaking 250 $270 and heading to 300 also. Could very well be a scenario where you don't need to have a deep seek moment for Nvidia to not do well and Apple to do well, right? So it's pretty pretty logical in my head to see that there are too many headwinds for Nvidia and it can get fixed. Sorry, too many headwinds for Apple and it can get fixed by Apple deciding what they want to do, right? It's not that tough for them to understand that. Let me just get over a few more questions. Sean says, any headwinds this next month? Okay, we'll get to that. People like you should be famous than a gameplay YouTuber. That's okay, buddy. We're just trying to help. So if I can help, that's good enough. Just go ahead and subscribe and like and share it with people. That's cool. Uh, any views on, I don't know what LVIM is, bro. I think you mean LVMH, Louis Vuitton. And Apple. Yeah, I'll talk about Apple a bit more. We got Devon in the house. How's it going, buddy? Apple revenue barely growing, or they have some new crazy revenue stream. So that is a question that has made this stock stay at a $3 trillion. The reason also exactly what you're saying, Devon, is exactly the same story. Apple's the third biggest company now. Exactly 2 years back, if you had to tell anybody that, they would be like, there's no way anyone's overtaking Apple, and no one's going to overtake Apple by about a 40% jump, right? So, do I see Apple becoming again the world's largest company? It could happen. I'm not saying no, right? Never say never, but can Apple fix this and reverse and head higher? Quite likely. Remember, Apple's business is services and products. A lot of people keep saying, oh, people have not bought the 16 Pro Max, and 16 has been their most sold phone ever, right? So the thing is, a lot of people talk without having to understand the concept that they still have $200 billion, right? They still have a lot of money out there. Yeah, Microsoft is larger. Yeah, that's what I'm saying. Apple is the third largest. You have Nvidia first, and then Microsoft, and then Apple. What I'm saying is, with a $200 billion cash cushion, they're not spending 200 billion, 100 billion on their AI servers and all of that. They're not doing any of that. So they have a lot of money. They could buy their way through. Now, here's what I keep thinking. Think of this when it comes to Apple. The better Anthropic, the better Claude, and all these other LLMs start getting, the worse it starts getting for ChatGPT. right? The worse it starts getting for Chat GPT and for Sam Altman, he might be open to having a tie-up with Apple, because that would help Apple and that would help OpenAI get to even more mass scale. Now, obviously, there is an issue there, is because you have Microsoft as one of the big owners, right? But who knows what happens then? Can Anthropic become now part of Apple, and that might go down? To a certain extent, it can happen, but Anthropic's asking for multiple billions of dollars, as well as Anthropic's lead or largest investors is Bezos and Amazon and all of that. So, how would they look at the Apple story? Maybe it happens, maybe it doesn't happen. My story is this: Trump hates Apple. He's worried as to why all these phones are not being built in America. That's one. Two, Apple has a lot of cash that they don't know what they're doing with. They're just sitting and making 5% on those yields that they have. Three, the other issue that's there with Apple is that there's nothing new coming out, right? Maybe a better camera and all of that stuff. Like the question that Devon's asking here is exactly, do they have some new crazy revenue stream? You know what I'm saying is, I don't really think they need a new crazy revenue stream. They don't need to find a new product that will give them the next $100 billion revenue or 20, $30 billion revenue. I'm saying they just got to figure out a way that they can get Siri to shut their mouth, literally keep quiet, and just get something instead of that to start answering our questions. Trust me, the minute Siri is out of this question and I get something like an OpenAI directly answering my questions instead of saying, "Hey Siri," something that just comes in and says and answers the question directly for me, Apple stock will be at 250 and higher. They do not need the new AirPods, the new watch, the new Apple Music to have, like, any of that audio qualities and all of that. None of that's needed. These guys will keep making money. Their 17 apparently is going to be coming with a lighter version or Air or something. And the next, they have their MacBooks, which are doing pretty well. They have their a new foldable phone that's going to be coming next spring also. So what I'm saying is that there are so many things against the company. That's why the stock is still a $3 trillion stock. It's not a $5 trillion company. It's not even a three and a half or a $4 trillion company. It's not even matching up to Microsoft and Nvidia, right? And I'm not saying they're going to grow as big as a Microsoft, as fast as a Microsoft is growing at this moment, or as Nvidia is. There's no way that Apple's going to grow at the speed of Nvidia. The thing is, all that Apple needs to do is just figure out a way to get AI to work for themselves. If they can get AI to work for themselves, which is for all of us, the stock can be at 250, 270 in the next 6 months. This is my bet with myself, okay? It's not financial advice, so don't go betting your horses on this. I believe if either Apple buys out Perplexity, again, I don't know if that's going to happen, right? What do I know? Two, if Apple goes out and decides to shelve Siri completely, their revamp of Siri that's supposed to be happening next spring, let's say they shelve it and they say, okay, you know what, OpenAI takes over or Claude takes over, we're just paying them 5 billion and story ends. If any of those things start happening, you're now going to start seeing a stock that overnight markets would be up 10%. The word Apple and AI are at two different parts of the world at this moment. The word Meta AI, the word Microsoft AI, the word Nvidia AI, even Tesla and AI are literally in the same city on this planet. Apple and AI are at two different corners of our world. The only way they get together is if these guys figure out something when it comes to Siri. And my bet is on this fact that, and I don't have a single dollar in Apple. So it's not like I'm trying to tell you guys, okay, buy Apple, and because I have Apple. I don't own a single dollar in Apple. My only story is that everybody is far too negative on it, which makes me want to realize that there is something out there which even a small amount of a change for Apple and the stock will skyrocket. It doesn't take too much for Apple to start heading higher if you just have a few changes that happen through. Uh, that's my bet on Apple. I'm not saying it's the right thing. That's just the way I think. Okay, I'm gonna get back to the any headwinds. Let me just see. What about N phase, buddy? I have no clue about N phase. I stay away from something. It's just out of my circle, so I don't really get into it. I stick to consumer tech, fintech, insurance technology. I stick more towards tech itself. It's just it's just my party out there. So I don't know anything about it, and I don't want to tell you anything about it. Uh, do you analyze the Indian market? Nobody, just the US, not anything else. So, any headwinds this next month? Let me get to that question. The market's opening in what? Anyways, let it open. It's fine. It's not like we're trading intraday, so it doesn't really matter. Anyways, logically, the point necessarily being for me is this, that the headwinds that I do see are two. One is in the July meeting for the FOMC. What if we don't start getting even the inkling of a rate cut in September or at Jackson Hole, right? What if the Fed says that no? And the Fed could very well say, I'm on the side of the Fed at this point because if I was a Fed governor, even I would be thinking as to, hey, the last time I met, we had tariffs. In between the last time I met and today, the tariffs were off. Now the tariffs are back on maybe on August 1st, while I am meeting on 30th and 31st of July. So, what do if the president doesn't know himself as to whether we are going to be seeing a tariff issue here or no, how am I supposed to decide whether inflation will come through from tariffs or no? Because here's what happens: the Fed is not someone that the president deems to be that, okay, let us cut rates now and then we can hike rates if inflation comes in. This is not a game of snake and ladders. You are the most trusted currency in the world, hence the most trusted Federal Reserve in the world. If this was happening in South Africa or in Estonia or in some part of Latin America, trust me, as great as those places are, no one gives a damn when it comes to the Federal Reserve of that particular country. But when it comes to the United States, everyone gives a shit because a lot of the countries globally also do peg their currency against the US dollar. And a lot of the currencies also have their sovereign government bonds, yields, reserves in US dollar, right? So, how does the Fed come up with any form of statement or any form of even any material that they want to come out and say, okay, you know what, here's the stuff, guys, we're going to be cutting in September. We don't even know if the day after the FOMC meeting, whether the tariffs that they're saying at on August 1st are going to get extended or no, whether they stay or they don't stay. No one knows anything, right? They don't even know if they want Powell or no. The only thing I know is that they don't want Powell, right? And the more they keep saying, okay, cut rates, it's less chances of him doing it because the market's going to start realizing that he's getting coerced into what Trump is saying. But the market realizes today that whatever the Fed says, we stick with that because now we know that at least there is some amount of integrity when it comes to Jerome Powell. And he's going to do whatever he believes is right. Now, whether that's right, whether that's wrong, it's easy to look in hindsight and talk, right? A lot of people keep coming and saying he did the wrong thing in 2020, he did the wrong thing in 2022. It's easy in hindsight, right? All that I'm trying to come up here and say is that there's more to this story than trying to figure out as to what the tariff rate is and whether rate cuts should happen. Remember, in the past 2 years, we've not had massive rate cuts other than the last time in September. Even during that period, we've been having a hiking cycle for the past from 2022 till now, right? So during all of this period from 2022 to now, the markets have been moving higher on a elevated interest rate level. So anyone that believes that this is something that can't continue, please go back into your charts, please go back into your history, or just type it into chat GPT if you want. But do remember that markets do go up even in a hiking cycle. You don't need a cutting cycle for the markets to keep going up. Okay. It is earnings of companies that matter and interest rates. Do Fed rate cuts help the economy? Yes. Do they help the stock market as much? No. It's tough for everybody to understand that, but it is the truth. Please do understand that there is more to all of this than this concept as to a 25 basis point Fed rate cut is going to cause the equity market to go higher. It doesn't even matter. Now, if it doesn't matter, why doesn't he cut? Is because what is important for the Fed is trajectory. The Fed needs to come to you and tell you that we are on a rate cutting path. This is not a case where I say, okay, I'm driving south, and then after 5 minutes, I'm like, no, now I want to drive north. And then 5 minutes later, I turn around and say, okay, back again south. It's not that kind of a party, right? If they say that they're on a rate cutting path, they continue on that path because the markets need certainty. Like I've been saying before, it's uncertainty versus certainty. So the certainty is in the rate cutting path or the rate hiking path. Now, when it came to inflation in 2022, if you go back and check, the market had decided that the Fed was in a rate hiking path, and they said they will do whatever it takes to tame inflation. So if you logically think about it, the thing that they did the most around that period of time was keep hiking rates. Because if they can be on a path of hiking rates, people would start realizing that the rates are going to pick up higher. That might affect the economy and it can hopefully bring demand down. If it brings demand down, inflation comes lower. That's the game in town, right? Now, does that really happen in real life? Does it not happen in hindsight? Everything looks great, right? But here's the whole story when it comes to the headwinds. I believe the Fed might signal rate cuts and you will see some form of dissent because Christopher Waller and Michelle Bowman, two of the Fed governors, Christopher Waller, I think, is going to be our next Fed chair. And I'll give you my math behind it and my story behind it. You may agree, you may disagree. Both are fine by me. I do believe that we will start having dissents. In the next meeting, I think we will begin to have dissent of Christopher Waller and Michelle Bowman. And they've already telegraphed themselves saying that they're in favor of a July rate cut. And I don't believe there is going to be a July rate cut. There will be a September rate cut, and they will let us know in July that we are looking at a September rate cut if tariff does not cause inflation, which is the same thing that's been happening in June as well, in the June meeting as well. So, cut short, the headwinds are tariffs. If they stay at these rates, that might affect the market. The market currently is not worried about the rates that are currently shown by President Trump onto these countries, is because they do expect that these are again negotiating tactics and the rates will drop closer to August 1st. Again, remember, if South Sudan or if Egypt or if some smaller countries, smaller economies, nothing against these countries, but smaller economies get tariff 30%, the NASDAQ is not going to fall because of that. If the EU gets tariffed heavily, the way the Chinese were getting tariffed, or not even up to triple digits, but if the EU gets tariffed, India gets tariffed, Japan gets tariffed, who's the other one left? Yeah, if these countries, UK is already done, right? But if these countries get tariffed like crazy, then that becomes an issue. Now, if these deals start happening at the back end and all these countries say, okay, you know what, we're okay with the rates that we now have, and they work towards a deal of, let's say, 10% or 15%, the markets will still rally because it's already discounted into the price. When we fell in April, we fell because we were discounting a 30-40% on everybody. When we recovered, we started discounting a 10% on everybody. That was the baseline tariff. Remember, that was the baseline tariff that was expected before they came up with that cardboard sheet saying yours 43 on these guys, yours 55, and yours 100 on some island with penguins on it, or whatever was the whole scenario that was going on there. Long story short, the markets are okay with a rate between 10 to 15% for the larger economies. For the smaller economies, they don't give a damn. This is capitalism, guys. This is how it works. As much as I might like going to those countries, they don't matter to the Nasdaq and the S&P. I'm talking about finance and making money, plain and simple. So, in the grand scheme of things, these things don't matter. Those Penguin Islands and all of that, and Antarctica and all those places, none of those tariff rates matter. It's these big countries that matter, and whether that can happen before the 1st of August. Again, my belief, August 1st is going to become August 20th or 15th. Some deal, one or two deals might happen before that. Some framework deal will happen. Remember, none of this is a bloody deal. All of this is a framework to have a deal that gets worked on over the years. Even then, all said and done, he is getting very good deals for his country. He is getting great deals. If you look at it logically, a lot of the deals that have currently happened, America is paying a zero tariff on their products entering those countries, and they're receiving products that are coming into America are being tariffed. So, whether it's the consumer that pays, whether it's the country that is exporting that pays, Whoever is paying that money is going to the American government in a way that they can balance the deficit. Is that good? Is that bad? Time will tell. No one knows, neither do I. But is it something that is worthwhile in the grand scheme of things to help the economy in balancing the budget? Remember, if he wanted to make the tax cuts permanent, which he already did, in America, it is not that I can just sign a paper and say, okay, tax cuts permanent, done. No, it doesn't work like that. If I am giving 300 or 500 billion dollars worth of tax credit, I need to balance the budget somewhere by saying my revenues in the government increase. Now, if I want $500 billion worth of tax cuts, I need to show $500 billion worth of tax gains. How do I show that? Tariffs. Simple. The second way of fighting the deficit and the budget deficit and everything else is to power up the economy. Now, if I have an economy that's growing instead of 1% at 2.5%, what that basically means is that it's more likely that now, under this new scheme of trying to grow faster, it is more than likely that I will now have a deficit which is growing slower than my growth rate of GDP. So, with both these ways, one is of the tariff ways and growing this GDP faster, I can necessarily balance the deficit and try reducing the damage. This is the whole bloody game in town. So, the headwinds that I'm coming back to in this grand scheme of things is tariffs not being extended is a headwind. The Federal Reserve had a situation being worried as to whether the tariffs stick, they don't stick, or whether we're in a scenario where the tariffs eventually do cause inflation. The fact is that everybody, the more people start screaming saying tariffs will not cause inflation, tariffs will not cause inflation, it starts making me realize that the tariffs could cause inflation. Remember, more people on one side of the boat capsizes. So if more people start getting ultra bearish, you should be bullish. If people start getting ultra bullish, you should start getting bearish or at least flat. I am not of the concept that everybody needs to get, uh, take the reverse at all points of time, but sometimes taking chips off the table is not a bad idea. You don't need to be there. This is something that I've been saying to everybody on the live. So I've been saying it since quite a while. Please do remember, you don't need to be at this party as the last person that leaves. You can leave a few hours before and still make a good chunk of money. That being said, I think there's a sandstorm coming. Maybe I can show you guys. Check it out. Anyways, so let's see what's happening with the market. 121 up on the Nasdaq. So the Nasdaq is again moving higher. Are we close to a new high? I remember the new high being somewhere around 23, 180. Okay, yeah, we are at a new high for the Nasdaq. So the Nasdaq has picked up. The Dow Jones is 51 points up. So still 1.5% away from an all-time high. The S&P is at an all-time high, 63.1. That's what we were saying since the live began. That it does look like a scenario where the S&P would open at an all-time high. Let's go over some of the stocks. Do we have anything? Nike's up 1.5%. Okay. Starbucks was up, came lower. Chime is an IPO that came out about a month back. When did it IPO? June 12th. It's about a month and a few days. Stock opened at about 44, 45, came all the way lower to 28, and now is at about 32. Anyways, quite possible this could go back to 44, 45. Maybe no. Let's see. Rest of the stocks, mostly everything's flat. A firm did actually go up to 71.20, 71.15. That's a stock that I look at pretty much on a daily basis. I like the management. I like the way they think. Again, not financial advice. You want to buy it, buy it. Don't want to buy it, don't buy it. It's okay with me. Okay, let me get to another question that we had. Any views on LVMH and Apple? So Apple, I think I made myself pretty clear about the Apple story. I do believe that Apple might head higher. Let's actually go check what's happening with Apple. And let's also check what's happening with the Russell. So Apple is up about 1.6%. I think it could head towards a new high, maybe this year or the year after. It's a $3.2 trillion company, so it's not really too big in the grand scheme of things, considering the fact as to how you're looking at a lot of these other companies actually flying in terms of valuation. They're just going crazy, like 4.2, 4.3 trillion. It just keeps going higher and higher. Anyways, let me just go ahead and check this. So what are we at? Oh, okay, cool. Yeah, so Apple's up about 1.4, 1.75. Do we have any news on Apple? Nah. Okay. Strong earnings expected. I think the earnings come out in about 11 days for Apple. So there's still some time. Okay, this sandstorm seems to be coming pretty close. Okay, then. Okay, let me just go over and see if we have any other stocks doing anything great. Uh, what are we? ARM is up about 2. Just looking through. It's not like, okay, Google's up about 2%. Google's also heading towards this all-time high. I'm telling you. It's about 10% away. It's just moving towards. I think if it does break 195, 196, it's going to go to 205, 210. More than likely that it starts heading there. Cryptos have been doing pretty well. So, I mean, they're pretty much there as where they were on Friday. It's not like they're skyrocketing, but because of which a few of the crypto related stocks, look at Coinbase up about 2, MicroStrategy up about 3, Riot is up about 5, Solana is up about 6. So that's at about 192. Quite likely you'll see Solana flying through the roof as well. It looks like a breakout. Anyways, what else do we have? Okay, now we have Apple up about 2%. So let's see. I mean, that might be the one that's powering up the NASDAQ higher. Let me see. Nvidia's flat for today. AMD, on the other hand, is just 0.78% higher. So nothing really fancy happening there. Tesla flat again to almost barely, like at negative or flat, like 0.06%. Anyways, nothing fancy happening there. Anyway, so this is just the market open that I usually do. So I'm glad you guys joined in. We got about 10 votes today. Which company's earnings are you watching the most this month? Tesla is what most people said, and it's tied up with Apple. My vote also goes towards Meta, not towards Tesla, but we have 3 votes for Tesla, 3 votes for Meta, and 3 votes for Google. So that's currently the talk of town. Anyways, some of the stocks that I look at. So Trade Desk was a stock that's entered the S&P 500 as of Friday. So that's done pretty well. It used to be trading at about 42, 44, now trades at about $80. So let's see how that does. Nike's another one. It's a dark horse at this moment. Not a lot of people are bullish on it. People have forgotten it. I think that could be a reason why it's heads into a triple digit number. That could pretty well be a reason. Anyways, guys, thank you for tuning in. Make sure you guys subscribe. Make sure you guys vote, like, do everything else that everybody other YouTuber tells you to do. Do the same for me. Go ahead and subscribe as well. And I will see you on the next live. So when you subscribe, you will get a notification as to when I do come up with a new live. Even if you don't get a notification, I usually come up at the same time every day. So it's about 30 minutes before the market opens. And you should see me live at that moment. Anyways, let me just end the poll so you guys can see the results as well on your screen. Anyway, should show up anytime now. Anyways, appreciate everyone joining in. Thank you so much. And have a good night. Enjoy yourselves. See you the next time. Thank you so much.